Welcome to another episode of About the Green. We're here with Nick Chan, Sales Manager for Coface, and we're here to talk about
trade credit insurance.
Yes, stuff that a lot of you probably haven't heard about before, or I should say a solution you probably haven't heard about before. A very good solution for what sort of industries would you say would?
You know what? Without being facetious, any industry, because anyone who sells on credit terms.
Okay.
Quite bluntly put.
Perfect. That makes sense. Are you more nervous about the first tee or
Absolutely.
interview?
First tee. Well, given that this is our second go at it,
Yeah.
And the first go the other day wasn't so flash.
Look at this, guys. Have a look at how bad that was.
Absolutely, mate. Yeah. Loved Auckland weather.
Yeah. Let's brighten that up a bit. I have been playing every week. However, you kind of have high expectations of how you want everything to go. Up straight over the top. It's going to be somewhere over there.
Oh yeah?
Oh, no, that's in the water. Oh, we might be something up there. Have a look. Thanks so much for coming, mate. I really appreciate it. It's going to be awesome to run through trade credit insurance, how it's going to help businesses, because people, business owners don't necessarily know. I'm sure we're a lot of conversation starts with this is how the product works.
Absolutely.
So first off, would you mind just running us through Coface and sort of what trade credit insurance is?
So first and foremost, Coface is a French company. It's an insurer. In New Zealand, we specialise only in trade credit insurance, as well as we do third-party debt collection. So I work for the New Zealand office, which feeds into Australia. And then regionally, we've got our offices in Singapore and Hong Kong. And then depending on the complexity of a transaction, ultimately I might need to put submissions through to Paris for approval.
Wow.
Yeah.
That's pretty cool.
Absolutely. The company itself has been around for 75 years.
Wow.
In terms of an insurance rating or credit rating, we're rated AA-,
okay.
which is top of the top.
Top of the top.
Class, yeah.
So that is the top number. And so the basics of trade credit insurance, what is the sort of solution that it's trying to solve, or the headache for a business owner?
Yeah, good question. Look, I look at any business that sells on credit terms, and the reality is you might have sold to the same business forever and a day, and they've always paid you on the 20th or the 30th of the month following. The reality is you're not sure how well your clients' businesses are performing. You're not sure what their underlying cash flow situation might be. And by extending that 30, 60, 90 days of credit, you've provided them goods and services that you're waiting to be paid for, and you deserve to be paid. But what happens if your client was to shut up shop, go into liquidation, have cash flow issues, be unable to pay your business the fair value for the goods and services that you've gone and delivered? What we do is we would go in and assess the underlying credit risk of your clients and their business, and you tell us how much credit limit you might want to extend to them, and we'll assess their ability and capacity within their balance sheet, P&L, whatever financials we can see, and tell you if they're good for the money that you want to go and advance to them.
Cool. Yeah, that's not bad. The greens are fast enough to have that roll all the way out.
Yeah.
Well done.
There we go.
Oh, easy.
There we go.
Well done. Well done.
You following me? On the green? Yes.
Oh, that was a lovely shot, mate.
Absolutely. Yeah, you're right.
That's a good putt, mate. Yeah, nice putt. I had it way out there and it just didn't come around. I must have just left it. Right, let's give it a bit of a whack. Oh, it's leaking again. Another tree.
It's in that big one, eh?
Cool, mate. So, say a business owner gets insurance over top of their debtors or customers.
Yep.
What kind of situations does Coface cover them for?
So effectively, what we do is we go, okay, in your normal trading terms, What credit terms would you extend to your clients? And typically speaking, if you're dealing in New Zealand, it'll be 20th a month following or 30th a month following. Some of them are on 7-day terms. What we do is we go, that's cool. We're not here to change the way you trade at all. We're here to support your normal trade. So our policy actually allows for a maximum credit period of 120 days.
Oh wow.
Yeah. So that, from a commercial perspective, we all know how it is. You'll be selling to your clients, payments due, they've got cash flow issues, or maybe they haven't sold the products or whatever it might be, and they go, look, Alex, can we have an extension of another 30 days? And you go, look, you know what, you're good for it. We've dealt with you in the past. We understand why you need to extend terms.
Yes.
So you do. And our policy will allow you to do that as many times as you need to from a commercial perspective up to the 120-day credit period.
Cool. Makes sense.
And as long as your invoices are within that total period, they're undercover with us.
Cool. And so in a situation in which you extend those terms for longer than you normally would trade in,
Yep.
and that customer doesn't, or falls over, goes bankrupt,
Yep.
decides that, no, I'm not going to pay you.
Yep.
That's why you're there, because
Exactly
you step in,
right.
you
Exactly
can cover that. Is there a percentage that you would cover up to in that situation?
Yeah, so historically speaking, credit insurance was around about the 65-70% indemnity mark, and this is going back way back. These days, 90% indemnity
Wow.
is the standard. We don't go to 100%.
Yeah.
Because we want the business owner to keep some skin in the game. It's like, okay, just because we've said that someone is good for the credit doesn't mean that you can dust yourself off of all liability. You've still got to have some skin in the game and be commercial about things, but we will indemnify you for 90% of your outstanding invoice.
Fantastic. All right, so we hit the ball a little bit right there, and we've probably got, looking at the screen, about 200 metres in. Oh, no, that's coming back at us.
Oh, no, it's gone a bit further up.
Okay,
Short
sweet.
of the bunker.
Well, that was very chunky.
Straight to the mine.
So, with trade credit insurance,
Yes.
does it cover just the risky customers that a business has, or is it covering everyone?
It covers everyone. You can be selective about what you want to cover, but to be honest, for us, having a spread of risk is better than doing a single debtor.
Okay.
Having said that, covering single debtors may be more expensive than you think.
Oh, wow.
So, for a couple of dollars more, why not actually go and cover the entire book?
Yep.
Because you'll have your own views on whether a debtor is risky or not, but you never know what's going to fall over tomorrow.
Yep.
So a couple of dollars more or less sometimes, get yourself the full coverage.
Covering all customers in case anybody, even those really solid ones that you've been trading with for 4 years,
Yeah.
those situations that you hear all the time where they just suddenly turn around and go, oh, I can't actually pay this bill anymore
Absolutely.
because I've gotten into too much debt and I've decided not to pay you.
Absolutely.
Cool.
Absolutely.
That makes a lot of sense. Nice and tight. Oh, that's probably pretty good, actually.
Oh,
that might
you're on
go
the
in.
pin.
Oh, lift it out.
Nice.
There you go. Thanks for showing me the line.
Here we go. On the green.
Not bad, mate. Wow, I can't believe how far that's going.
Yeah. All right.
Good part, mate.
Let's see if we can get any closer.
I can't believe, how far that rolled.
Yeah.
It just kept going. Yes.
There we go.
You know what? I think your part... Well done, mate. Cool, mate. So the age-old question, I guess, is what does it cost for a facility with Coface?
Oh, that's a good question. It really is a case-by-case thing. At the end of the day, we're insuring underlying credit risk. Okay, so what we'll do is we'll look at who your key debtors are and what that credit risk spread looks like across your portfolio, and of course what credit limit you need against each debtor. So if you need a big limit against a risky debtor and a small limit against a well-rated debtor, then your pricing or your premium rate is going to be a little bit higher. on the converse side of things, let's say you're a food manufacturer and you're supplying into the supermarkets predominantly, big well-rated debtors, and then you've got smaller contract manufacturing contracts that you're fulfilling. You might have a small exposure down at the riskier end of things. So it is balanced across that portfolio and risk. But generally speaking, it could be something like $300 per $100,000 of revenue.
Oh, that's not much at all.
Not much at all, right?
Nothing.
So when you think about the grand scheme of things, it has never been cheaper to go and insure your credit risk. Having said that, it does depend on your overall business size, what industry you're in, and a whole lot of other factors that come into play. But as a run-of-the-mill, off the top of the head thing,
yes,
it could be $300 per $100,000.
That's nothing.
And you could just add that onto your invoice.
Exactly. And you can offset that by sending it through to your customers.
Absolutely.
I think that's fantastic. It just allows you to sleep well at night.
Yeah.
I specifically am seeing a lot of difficulties in the business industry at the moment,
Yeah.
business market in New Zealand. And if I knew that I was in a specific industry that was struggling, something like hospitality or retail, and I could cover my clients knowing that if anything was to happen, I was still going to get paid, I would absolutely pay 3% for that.
Absolutely.
It's nothing.
0.3%.
0.3. Oh, even 0.3.
Yes.
Oh my God, actually. Wow. Oh, I keep hitting them just a bit chunky. That's not going to get there, unfortunately.
Just short there.
Yeah. Oh, that wasn't bad at all. Oh, how many lips am I touching, mate? Nice,
Yes.
well done, mate. Hi, mate. So, what's the sort of biggest objection that you would get with trying to sort of sell or promote trade and credit insurance to business owners?
Look, I think with insurance of any form, right? If you haven't had a loss, you haven't had a need before, you're going to say, I don't need to insure it.
Yep.
So for me, what I'm doing at the moment is I'm putting a lot of quotes out there. We're assessing underlying credit risk. We're telling businesses that their debtors ledger is insurable and we will underwrite the credit risk of their buyers for them. But because they've never had credit insurance in the past, it is still a relatively new thing in New Zealand. The most common objection is, well, we never had a loss in the past, so I don't need to insure it.
Yep.
But the reality is any form of insurance is about protecting you for the future. And at the moment, with insolvency rates in New Zealand going through the roof year on year, even month on month,
Wow.
In New Zealand we're talking about triple digit figures in terms of insolvency every month.
Wow.
You don't know where your next bad debt may come from. So I think it's a fair call. Okay, if you've never had a bad debt in the past, you've got great credit control and credit management in the business, but you don't know when your next client is going to fall over.
Yes.
So that is the most common objection I get. But let's look forward. If you're wanting to grow the business, if you're wanting to maintain your business safely, at least go and get a quote and see what it might cost you to put that right protection in place.
Yep. I mean, that makes complete sense. It's exactly the same as car insurance, right? I've gone my whole life, I've never had a car crash, nobody's ever hit into me, and then something happens, right? And then it's always that time, probably as you go down to third party or something for some strange reason that you get hit into. Happens every time, Murphy's Law. It's exactly the same. And when your business is the one that puts food on your plate, which puts the mortgage, pays the mortgage to keep a roof over your head, 0.3% on the amount that you're going to be securing is a small price to pay to just feel safe.
Absolutely. That's straight.
That was nice. That was a hard shot.
It's coming back. It's coming back.
No way.
Oh,
Lovely. You sent that out so far. I was not expecting that far out.
I was going here.
Well, that was terrible. Is there anyone over there? No, no one's over there. Oh, caught my club.
Left of it.
It'll get out. Yep.
Yep. Oh, look, you're going to lip it again.
Is that going to lip again? Is that
It's
going in?
It's going in.
Oh, what is happening today, mate?
There you go.
That felt really uncomfortable. Something's feeling a bit weird. That's lovely, mate.
I wanted to get under the tree, that was the start.
Yep. Oh, that won't be too, it won't be too bad, I think.
Right.
Yes. I had full trust, I didn't even move.
I think I left a bit,
That's fine.
but it's up there.
I was pretty much aiming there. Oh, no way. Just give it a bit of oomph.
Not enough.
Bugger. All right, mate.
Oh, that's a bogey to finish.
Thank you so much for coming
Thank you for
and
having
running
me.
us through trade credit,
Thank you
mate.
for having me, mate.
What a crazy, awesome solution for business owners, right?
Yeah.
To cover them.
Absolutely.
And I hope people get a bit of knowledge out of this.
Absolutely. You know, it's about one, protecting the business, two, helping it grow. It's got a heck of other benefits too. So yeah, hopefully I can share that knowledge.
You definitely did, mate.
And I'm always more than happy to go and answer any questions.
Easy, man. Thank you so much.
No
Nick.
worries.
Awesome to have you along on the series. And thanks for making those wicked putts today.